Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the hourly price chart for Marathon Digital Holdings Incorporated, stock ticker MARA. So as we can see here, we're seeing a bit of a reversal here to the top side today. This is starting to look like a very erratic trading chart here. But what we've been looking for with this name is a potential reversal point here to the downside. And it does look like we're starting to attempt to form a base here. Roughly at the 786 retracement. To define this dominant trend move, what we really did was we looked at let's get an exact number here. We looked at the price lows of 1885, which came in during the July 11 trading session. And then we saw that the price rally here ultimately resulted in price highs of 2730. So if we're looking at this as the dominant price movement here, we've been watching these various Fibonacci levels, and we can see that a lot of the selling pressure did start to accelerate after we broke this 61.8% Fibonacci retracement that we've been watching fairly closely here. This level came in just above $22 per share, and we did see a fair amount of extension here to the downside. We actually did break through the 786 retracement as well. The 786 retracement here came in at roughly $20.60. And we did see sort of near-term lows here, which came in at $19.91. So, we did break this area by about 70 cents. But, given the reversal here, I'm a bit inclined to call this, a bit of a false breakout here because, we are starting to see a turning point here, a rally higher. We didn't really see a consistent ability for the stock to trade below this period. I mean, we did actually bounce fairly quickly from here. There was a bit of additional downside movement here, but this also ultimate price gap here. We can kind of zoom in here a bit. This ultimate price gap here really did sort of invalidate any downside breakout activity that might otherwise be expected. So, there are some conflicting signals that are going on here. But if we're able to break above this exponential moving average cluster, that would be a tremendous help for the stock in terms of being able to find a bottom. In addition to that, we do need to look at the indicator readings here because there are some additional signals that are developing here. As we can see, if we go back to these prior highs, 2730, which posted on July 17, we can see that, there was a fair amount of downtrend momentum here, negative share price momentum, which was reflected in the relative strength index itself. For the most part, the stock did obey this downside trading momentum indicator reading here. But we have since started to see a reversal in this activity, in this bearish condition, just as the stock was rolling out of oversold territory. So that's a good signal. I mean, that is a positive signal. Here we can see that not only does this downtrend in share price momentum, not only does it break, but we also roll out of oversold territory, and the relative strength index, which is this purple line here, it also breaks above its own exponential moving average, which is this yellow line here. So we see a fairly significant price break here. We can kind of zoom in on this a bit, maybe see it a little bit more clearly. But you've got a few different signals here at once. You're rolling out of oversold territory. You're breaking this downtrend in share price momentum. And then you're also breaking above your own exponential moving average. So, there are some positive signals here, which do suggest that, this breakout here could be the real thing. In order for me to trade this, what I would want to see is a break and close above this exponential moving average cluster. We're not quite there yet. We have broken. The activity here is a bit strange because what we're seeing currently, the stock itself has broken above the 20-hour exponential moving average, which is this descending yellow line, as well as this kind of flattening blue line, which is the 200-hour exponential moving average. But we have not broken above these shorter term moving averages, which would be the purple line, the 100-hour EMA, and the orange line, which is the 50-hour EMA. So, we've essentially broken above the shortest term and longest term exponential moving average on this chart, but we have not broken above the two middle time frame exponential moving averages. So that's not exactly common to see that. So for this reason, what I would like to see in order to get a bit more clarity here would be just to see a break above all of these at the same time. If we are able to get a bit of a move higher here, we can start to project higher prices. So currently, the main historical resistance zone that I'm seeing comes in at 2214. This would be the price high from July. This would be July 26th. We have not quite breached that area just yet. So we've got 2214 as the high, and then we've got 2193 followed by again 2193. So we're sort of flattening out here, and we're not able to even retest these prior highs above the $22 level. So this really is the breakout that needs to occur at this point. I would be a bit concerned here if we did start to see declines from here. This would kind of suggest a failure point because we're sort of knocking on the door here of a true reversal. But we're not quite there yet. We need to see a little bit more follow through here in order to confirm this breakout. But overall, when we look at this broader picture, there are some positive signals here that are starting to develop. And even if we don't immediately get the price break here, all of this does sort of suggest that these total declines, these longer term declines, I mean, we can really go back, all the way in time like this here. What we're seeing here currently does sort of suggest that this downtrend here has really run its course and has reached the point of exhaustion. So, in my view, it's unlikely that this will extend much further. I don't want to officially call the bottom just yet because I do, as I said, I want to see a break of these moving averages. But if we do that, I think that we can really start to call an end to this prior downtrend. So here's the current market analysis for Marathon Digital Holdings Incorporated, stock ticker MARA.